Hello, my name is Lachlan St Clair. Welcome to this special investment update from CSP. Obviously, the markets are in absolute turmoil at the moment, and clearly that's driven by the COVID-19, or COVID-19, I should say, the coronavirus that's sweeping the globe. And I've got to be honest, this is probably the most fluid, unstable, volatile investment environment I've ever been in. In fact, I think it's probably the worst that it's been since the Great Depression, pre-World War II. It is just extraordinary. Things are changing on a daily basis, and things have changed pretty significantly over the last week or two. So I want to do a quick update to bring everybody up to speed on our thinking, and what the thinking is from the brightest minds in the industry, and as well as a little bit of reassurance. Obviously, a number of clients are getting quite concerned. Firstly, as I mentioned before, things are changing, and this is an unprecedented time. And I think that unprecedented component is important. One of the problems for the share market is that there is no precedent. We have never gone through a pandemic like this before, and no one really knows how it's going to pan out, or more importantly, what the timeframes are for how it's going to pan out. I think it's fair to say the investment world went from a frame or a stage of, I won't say confidence, but certainly one where in 3 or 4 months' time, no one really thought we'd continue to be talking about this. However, I think it's fair to say over the last couple of days, that's changed quite significantly, and most of the investment guys we speak to now are preparing for a very significant economic contraction, a serious recession, probably worse than the GFC, with a worst case scenario of another depression. But I don't think that's going to happen. I'll explain why in a minute. So what has changed? What has changed is clearly the rate with which this COVID-19 is taking over the world, and the degree to which governments are shutting down their economies. And that's basically the problem. In the Western world, effectively Europe, the global economy is being turned off, or great swathes, I should say, those economies are being turned off. As people are locked in their homes, schools are turned off, cafes, restaurants, pubs, bars, small business, all these parts of the economy just go from a regular environment to literally there is no business, and they've done that within a week or two. I even know in North Sydney the foot traffic in North Sydney is down 80%, and I know a lot of those restaurants and cafes and places that serve lunch are all going to absolutely struggle, or go to the wall really, over the course of the next few months. So that's really what's changed. The global economy is being switched off in the short term, and demand, there's been a global collapse in demand. So people are just not buying things that they used to buy. The luxury expenses have obviously gone, and people have sort of gone into I wouldn't say quite a panic mode, but almost a war footing, I suppose, in many ways, and that's what governments have done as well. So what do we do about it? Look, the long term, the good news out of this is that governments are acutely focused on the problem, and some of the best minds on the planet are working on the solution for how we get out of this. From an economic perspective, I'll leave the medical commentary to others, obviously. So you have some of the best minds on the planet in government working on what the response needs to be. Governments globally have shown an absolute willingness to confront this head on, and I think that's a good thing. There will be massive additional stimulus come down the pipeline over the next couple of months, as people, A, start to struggle more, and B, as the government tries to reinflate the economy out of the back end of this process. Figures I'm seeing, Hamish Douglas came out today, who runs Magellan. His figure was sort of between 20 and 30% of GDP is required in stimulus. So to put that in context, that's $500 billion Australian dollars, give or take, required to, 500 billion, not half a million, 500 billion Australian dollars required in stimulus to reinflate the economy. So what does it mean for investors? Look, I suppose there's two comments I really wanted to make. Firstly, we have our bucket one exposures for a reason. The great bulk of our portfolios, particularly those in pension mode, have been conservatively positioned and have been in that position for some time now, really since late 2018 for most clients. That conservative position, to state the obvious, is serving everybody well. People have not been as exposed to this equity market pullback as they might otherwise have been. For a number of clients who've actually taken the opportunity to make a small placement in the markets early this week, because the future forecast return from Farrelly's are up around the 13-14% mark at the moment. Now when I say that sounds great, but you clearly need the time to ride through to get to that point. And the thing I'd counsel everybody to focus on is your bucket one allocation. We do have significant income coverage in bucket one for most clients, for most all clients, and our bucket two assets, most of them holding up quite well in addition to that. So you do have the time on your side with the bucket one exposure. You do have bucket two performing reasonably well, all things considered. Clearly, the equity component or the bucket 3 component of the portfolio has been hammered. There's no ifs or buts about that. That's the way it is. But the portfolios are designed to withstand these sort of shocks. So, clearly selling now is selling at the bottom of the market. I don't know if it's exactly the bottom of the market, but you're selling at insanely cheap prices, and that's just not how you invest money. So, our encouragement to all our clients is to hold your nerve. I think one of the important things when times are like this is to say, what can I actually do? The last thing you want your financial advisor to be saying is just sit tight and ride it out, because it's very disempowering. The one thing that you can do, and the one thing a lot of our clients did during the GFC, was reduce your expenditure. So the one thing you can manage on your balance sheet is the income, or the amount you're spending. Clearly, if you reduce that amount, you're reducing the rate at which bucket 1 is being eroded, and you're buying yourself more time for the bucket 3 side of your portfolio to come back. So if there is one thing I would encourage clients to do if you want to do something, it is to review your expenditure and pull it back where possible. It's kind of a bit of a case of batten down the hatches, and that will buy you more time to allow the recovery to take place. That's it for the sort of the key side of this from an investment perspective. The other 2 comments I suppose I just want to make. Firstly, most of CSP is now moving to work from home. I'm at home at the moment, as you can probably see, along with my daughter, whose school, she got her first day of school from home today, from remote learning. So obviously a fair bit of change in the economy. 1 or 2 staff are still at work. I'll be coming and going, but just give us a little bit of time. If you're ringing the office, we're having trouble, putting you through to various numbers. We're just sort of getting the hang of our systems now that they're remote, telephone transferring and things like that. But we are doing our best, and we'll come back to you as soon as we can. The other point to make as well is we will now be video conferencing for all clients. I think that's in the best interest of the business. I think it's also, frankly, in the best interest of our clients, particularly that if you've got to get public transport to and from my office to see me. I don't think that's a risk that's worth taking at the moment, particularly given video conferencing works so well. So we do have video conferencing facilities set up. All you need is an iPad, worst case scenario, an iPhone, or a laptop. If you've got a computer, you'll just need to get speakers and a microphone just so you can speak. Most speakers and most desktop computers don't have speakers and microphones. So that's an easy process. We'll talk you through that as the time comes. As I said before, we are watching the markets very closely. We did make that small investment into equities at the beginning of this week with 1/3 of portfolios for a number of clients. For those of you who haven't touched, I haven't got back to you for the reasons why, but it has been deliberate. For those of you who we have touched, I am in no rush to make that second tranche. I think we've made that first call. We bought it at a good price. I think it's a matter of really now just allowing this virus to run its course more fully and just see how, or if the market has significantly mispriced, what the outcome is going to be. Look, that's it from me. This was just a quick update. I apologise in advance. It's not going to be our most polished video, but we want to get it out quickly because, as I say, things are changing so much at the moment. I think that's really important. If you've got any questions or queries, of course, you're always welcome to give the office a buzz or drop me an email. And otherwise, we'll look forward to talking with you soon. Thank you very much.